obtain, but you certainly have to educate. So I'd like to just very quickly show the positions that I have open right now. I sold short the DAX yesterday at 12,560, and hopefully you should be able to see the chart now.
Yeah, we're looking at the chart now, which is great.
Okay, excellent. So this was about. I think I prefer to do it. So here's yesterday's trading session, and what I saw yesterday. You see, one of my favorite patterns is I love to sell weakness. I'm not I don't believe in necessarily finding the tops or finding the lows. My strength is lying in selling weakness or buying strength. And yesterday, when we came to work, we were somewhere in this area here, and I immediately noticed this long congestion zone that we have here. So when you are in an uptrend, you will always have counter moves. But when these counter moves begins to last more than a few hours, the odds are overwhelmingly high that we've now entered a congestion zone, rather than we are in a holding pattern before the trend resumes. And so yesterday, for me, it was a question of trying to find a place to sell short. So yesterday morning I had a losing trade because I was short in this area here. Market had a very quick rally up, and let me just see here. I think this is the one I can draw on. So yesterday in my Telegram group, I sold short the DAX about here, about 60, and I think we got out of that 30. I'm saying these things because I can back them up,
Sure.
because I have a time-stamped Telegram group where
when you did that first trade and the market went against you, Tom.
Yeah.
When did you think, oh, this is not working, or what was your reaction?
Well,
or reaction to that going against you? Did you close out at a particular point?
A good question. I was already short from when the market sort of pre-opened, so around here, and things were going okay for the first bar. So I had a stop loss which was rather big. I had a 50-point stop loss, and I was trading a smaller size. So I was trading 50 euros a point rather than the normal 100 euros a point. And very quickly, when you're looking at a 5-minute chart yesterday, it very quickly feels as if this market has strength in it. And so when you observe the open at 8 a.m. and you immediately begin to see strength, I got worried about that, and I closed out the position. I think I didn't let my stop loss get triggered. I wrote to the group that I'm closing my position, and I believe that I lost 20 points out of the 50 allocated, because I don't necessarily believe in letting a stop loss get hit if I'm no longer convinced that the market is doing the right thing.
Mm-hmm.
So for me, it was a question of waiting, but I still look at the bigger picture in the DAX, and this is a 1-hour chart, and here's a 4-hour chart, and right now I don't really see any reason for being bullish the DAX, and this is why I am short the DAX right now. I would also very much like to be short the DAX this morning. So if you would excuse me, I'm just going to look at the 1-minute chart. Okay, so a bar like the one we're seeing here has a very specific meaning to me. because I call this an extended bar. An extended bar is a bar that is significantly longer than the bars that's coming before. I'm just explaining the theory here. And also it has a very negative close in that there's very little wick, there's very little tail to it. What complicates matters a little bit is that right now DAX is actually suffering a quite a significant gap down. We closed yesterday at 12,540, and we're opening today about 100 points lower. But I would like to show you a slide that I brought along before I actually engaged into live trading. And it's this one here, because this is the reality of what we are confronted with every single day. Here you're seeing the allocation of winning days against losing days in the Dow Jones over the last 30 years. And so over here on the left side, you are seeing the most extreme days followed by the less extreme days, and then you see the most extreme days to the upside. So you're seeing here is 7,500 observations over the last 30 years in the Dow Jones. And the reality is that we can be talking about trend following or counter trend following and Fibonacci ratio, but the reality is that every single day when we come to work, there's a 50-50 chance that the Dow will close up or down for the day. So no matter how severe an uptrend you're in or how severe a downtrend you're in, when you are a day trader, you have to fully believe that anything can happen during the trading day, irrespectively of what the trend may have been the day before. Because when you're studying the facts of the matter is that when the Dow Jones traded 30 years ago, it was trading around 1,700 to 2,000. And today we're trading at 26,000. So even though we have over the last 30 years average compounded by 7%, the allocation of winning days to losing days over that time period is still 50-50, 49.6 to 50.4. So the winning days have a slight edge of 0.4% over 30 years. So it's very important that you bear that in mind when you are day trading, because you literally have to think like a trader rather than think like a statistician or think like a textbook technician. You have to be able to simply handle what's right in front of you. So this is the Dow Jones. A quick look at the FTSE. The first bar that we saw here is a very negative bar, and now we're having a very positive bar. So if I was going to do anything right now, it would be I'd like to sell short the FTSE, simply because I still think that the market is under pressure, and I am looking at the trend. I'm thinking this trend is actually down. So let's have a look.
So that's interesting, Tom. You're looking at the wider trend from 2 to 3 days, or?
Yeah, I'm actually just trying to trade at what is going on in front of us. So just before I joined you here at 7:30 this morning, I sold short the Dow Jones here at 26,712. If I show you the chart that I was looking at half an hour ago, it looked something like this. This is cheating a little bit, but it's just to give you an idea. So this is roughly what I saw 30 minutes ago. Don't know if that sort of gives a picture of what I was doing. So this is what I was doing. This is what I was looking at. So I still think that the Dow is going to, at a minimum, come down to these levels we're seeing down here. And this is one of the reasons why I would be keen to sell short the FTSE. So why don't we just, so it doesn't become too boring, we actually sell short the FTSE. Would be nice to have some weakness, because this is a very strong counterbar as well. And we're not even at the extremes. Or maybe I should just hold off a second before I actually click that sell button. Because I'm not interested in a trade where I make 1 or 2 points. I'm interested in a trade that I can build on. Let's go over to crude oil, where I have a position that I initiated about a week ago. If you look at crude oil on a daily chart,
We've got a question as well, Tom, so when you're ready, if you...
Yes, I will take questions at any point here. I wasn't quite sure what to expect of this, because trading live is one thing, and I do it every single day. But if there's nothing to comment on, I don't say anything. I'm just quiet.
Exactly. We all understand that. We've done these from time to time before, and sometimes the market's not presenting any good buying or selling opportunities. I mean, Kapil is asking a good question. He says the forex market seems a bit slow and a bit not as volatile as it used to be over the past few months. Is there any reason? Would you agree with that, or?
Yes, I would absolutely agree with that. So let's take a look at the let's take a look at the currency market. We can just go through a couple of charts here. So here you have dollar yen. And dollar yen has this perception of being a safe haven. So if you are seeing volatility to the downside in the equity market, you often see that is correspondent with the dollar yen falling. But looking at a day chart, you're having this long congestion zone here for the last couple of months, and it's been incredibly challenging to make money, the real money in the market, in the yen market, which is the reason why I focus a lot of my energy on indices, because I find they're easier to trade than currencies. I was quite keen to initiate a short position in sterling dollar, and I'm waiting for a moment to do so. I think I'm seeing some weakness in the FTSE now. So my premise was right. I was just not at the extreme. So let's still short the FTSE. Let's see if we can just get that to tick up. I can't be bothered to be a dick for a tick. So if I sell short here, I've shorted at 37. If this market begins to trade above, let's see, 45. So I'll put in a stop loss at 45. So let's see that let's say we're risking 13 points. So put it up at 50. So what I would do here, if I'm right, is that if I executed a trade at 37, now that I can get in at a better price at 42, 43, I wouldn't dream of entertaining the idea of adding to a losing position. It just simply wouldn't. It's just not in my universe. However, say for the sake of the argument that the FTSE comes down here to 36 and 35, I would sell again. Whether I get the opportunity to do that today, that remains to be seen. Now, let's take a look at the DAX. So right now we have a weak open, and we are actually beginning to build momentum to the upside. So we have one 2, 3 positive bars. So what I'm going to do now is that I trade with TD365 because they have fixed spreads and they have very tight spreads. But they also have this function here that although I am short the market, I actually have the ability to click on this little hedge button here, so I can go long, which could be a bit of an advantage for us today, because it enables me to trade against the position that I have right now.
So that just switches the order around, does it?
Well, it enables you to have a long position and a short position at the same time. But I think I'd like to just give this a moment or two. And
would you normally? I mean, I set the start time as 8 a.m. London Open for these sessions, so it wasn't the timing wasn't your choice. But is this normally a time where you would trade, or would you normally let the market settle after open?
no, I would trade if there was an opportunity to do so. So if I saw an opportunity, I would absolutely be on board. So here in the DAX, I would actually begin to think, okay, I need to be long DAX. So I'm buying the DAX now at 72. And I will have a stop loss. Let's say we'll give this 20 points. Just checking gold. I have a gold position from earlier. Dollar yen, I think I'll leave that alone. Leave that alone. While I'm waiting for something to happen here, I prepared a couple of slides, or at least this one slide here, because I understand that my trading philosophy might be somewhat different. I want to show you this just very quickly. And I know that this is written in Danish, but don't let that bother you. The headline is in Danish. As traders, we have a tendency to let our supermarket brains invade our space where our trading brains are. So when we go out shopping on a Saturday morning, whether we are consciously aware of it or not, we would be attracted to things that are cheap. So this is the power of the supermarket, so to speak. I'm just keeping an eye on things. That we are attracted to things where we feel we can do a bargain or make a bargain. And supermarkets know this because this is the way that they draw us into the supermarkets with special offers, buy one, get one free, etc. But what I learned over the years as a broker is that when ESMA announced the new initiatives last year, they forced brokers to put up a disclaimer on their websites, very much like the cigarette packages. They will have a disclaimer on their. They will have a disclaimer on the parcel with a photo, a horrific photo. And so now, too, the brokers will have to declare how many of their clients are losing traders, and that that lies around the 50% mark, sorry, about the 70 to 80% mark. But the reality of it is that it's actually a wrong piece of statistics, because you will also have quite a large amount of traders that are just merely breaking even. And so the total loss, the total percentage of people that are losing and are breaking even is more closer to the 90 to 95%. And when you're sat at a trading desk day after day, month after month, and in my case about 10 years, you notice how people love to try and pick a bottom in the market. So if the Dow Jones is falling or the DAX is falling, you see far more buying activity than you're seeing selling activity. And I think it's because we have this mindset when we come to the market, is that we think that the market is a bit like a supermarket, and we've been told that we should buy low and sell high. And if we are bringing the same attitude to the financial markets that we have in the supermarket, we will go into the market and we would be thinking, I'm not going to buy the DAX now because I have to pay 70 for it, and I could have bought it for 50 20 minutes ago. So all things being equal, it's gotten quite expensive. And the reality of it is that I would much rather, and now I'm paraphrasing, I would much rather be looking to buy something as it's falling, because look how cheap it has gotten. And this is a strategy that I'm used to from when I go out shopping. And so there we go. Let me just get rid of this. That's better. And so when we are confronted with a market that is rallying, we have a very hard time jumping on board. And I know that this is probably not going to work out for me. This is not going to end well. But I hate to be not trying to establish credentials here, but I post my trades every single day. And over the last month or so, over the last 2 months, I've generated a couple of thousand points live, posting my trades. People can see the prices that I post at. And I'm not saying this to in any way, shape, or form impress people, but more to make people aware of the reality of the world, is that your trading is not going to be judged on the outcome of a single trade or a single day. Your trading will be judged over how you perform over months and years. And you have to think very carefully about what is your trading philosophy. I think there's a good chance here that I'm gonna my stop loss is at 53. I'm gonna think I should have been stopped out by now. I'm not sure why I am not. There we go. So I might actually get a second chance here on this FTSE. And so the philosophy that you have to bring to the table is the one that largely determines whether you are a winning trader or a losing trader. So what do I mean by philosophy? Well, what I mean by philosophy is that, are you capable of selling short something that has already fallen, and are you prepared to sacrifice some of the points that you have made? This looks like a pretty negative bar. I'm just going to hold off here. I think I'm going to focus my energy on the FTSE here. So I'm going to sell FTSE short again here. Would like to see this. Actually, I'm keeping an eye on this number down here. So you understand that I feel a little bit under pressure to trade here, because it is 1 hour condensed there, and I don't mind doing that. So here we go. So the FTSE is actually showing me a positive. Normally I would wait to add to my winning positions until I at least had some buffer and I could move my stop loss down. But you have by and large, you have a somewhat range bound morning. We seem to be moving in a 20-point range. We're not really seeing trend either way. Take a look at the FTSE. Just went up to test the higher the range. Still think that this is going to move lower, so I will sell. So I better just emphasize this. I like to sell weakness. I like to buy strength. The FTSE technically is giving me an opportunity to get in at a better price than before, but it's not my philosophy. The good thing about TD is that you can actually follow the prices up here on the tab. I quite like that.
Tom, quick question from David.
Yes.
So you just trade based on naked price action and not use any indicators?
Yeah, because indicators, again, for me, it's a question of philosophy, and I imagine that I would need a lot more time to explain this. But what is it that indicators do? What's the primary function for the user, and what are they composed of? Well, say for example, let's take a moving average. A moving average is the average prices. So by definition, all you're doing is you're getting a lagging visual impression of what has been happening. And if you are incapable of getting the same information from just looking at the individual charts, then it seems that you'll be more helpful to go and get an examination at the optician than necessarily putting your faith into an average line. So a moving average is comprised of an amalgamation of time and price. Stochastics. Stochastics, what is the purpose of a stochastics? Well, the purpose of a stochastic is to, first of all, is comprised again of time and price. So it's a mathematical manipulation of time and price. But the purpose of the stochastics indicator would be to suggest to you when the market is getting cheap or expensive. But that's not my philosophy. My trading philosophy is derived from the, let me just find, where did I put that presentation? I think I actually managed to just get it close. One sec. Much of my trading philosophy is derived around the ability to trade trend days. Now, trend day is an expression that Larry Pesavento and Harry Hill no, sorry, what was the name? Mr. Hill, I can't remember his first name. They did some work about this in the 80s. And the idea is that when the market opens, there is an 85% chance that where we close at the end of the day will be in the opposite extreme. So what I'm trying to do when I'm trading is I'm trying as quickly as possible to jump on board what I am thinking the trend is going to be. And where I make my money, the really big days that I have, is the days where I catch a trend like this, what you're seeing here in a highlighted blue. And so when I execute a DAX position and I just lose 20 points, I don't give a hoot, because I know that once we catch on to a trend day, I will very quickly make 150, 200, 300 points, because my trading philosophy is that once a trend has established, the tendency of it to continue will be higher than it will be of reversing. So a beautiful day for me will be a day like this Tuesday here. But a nightmare of a day for me would be something like this Wednesday. If I had already bought the DAX at this point here and I've been compounding my trade position, and then the market turn around, I'll very often end up with nothing. And let's just say, for the sake of the argument, that I'm now selling a double top, and now I am beginning to compound my short position, and the market then begins to turn around. Well, then I'm ending up with a loss or a very little to show. But once I actually hook on to a trend, it takes quite a lot for me to be shaking off this trend, and I will ride a trend like this. So it's not a question of me just having one shot in the barrel. I need to have the mental flexibility to be able to resaddle, so to speak, and actually being able to move in the opposite direction if the market dictates so. So I've done a tremendous amount of work on defining trend days, and there's generally 5 scenarios under which trend days can be established. And just make it a little bit more visible to you. But obviously, what we are dealing with here is this is not a seminar on the theory behind trading. This is live trading. But if you guys ever want to be educated in this thing, you should consider having a web seminar with me here, because where we as traders make really big money is when we catch trend days. And I teach statistics surrounding the opening. So for example, by the time that we get 30 minutes into the trading session, there's now already a 70% chance that we've seen the high of the day or the low of the day. Unfortunately, what we're dealing with today is a day where we have no discernible trend. And for someone like me, this is the proverbial nightmare to trade. I mean, I don't have to defend myself here, but I can just show you the first 40 minutes of trading, and we basically just still hovering around where we started. We've been down, we've been up. I bought along here because I'm thinking, okay, this market might actually have a chance to push higher. But that was followed by a negative bear bar. And instead of seeing continuation on this bear bar, we're just now sitting right in the middle of no man's land, and there's actually very little going on. So for someone like me, this is horrible to trade, because there's no clear direction. But I still have an overriding desire to sell short the market rather than actually buying the market.
Tom, just to remind us, you're trading on a 5-minute bar or a 1 minute?
And again, the time frame that I trade on is not so important. I don't necessarily get a clear go signal on a 5-minute chart, I try and gauge the direction to the best of my ability. But from my point of view, and with the experience that I have, it is much more important that I come to work with the right kind of mindset. If I'm in any shape or form afraid of losing money, then it's game over before you even start. So if you sit there and you are right now, many of you will be thinking right now, well, he's just lost 20 points. And it's perfectly natural to, when you are confronted with other traders and you're watching them making a losing trade, subconsciously you're thinking, and consciously you might be thinking, oh my God, he's not very good. Why on earth should I learn from him? Because psychologically, we're just not equipped to handle pain. We have a 200 million year old reptile brain that is doing everything in its power to protect us against pain. And so when we come to work and we are confronted with someone who's losing, we immediately reject their premise because we're thinking, well, I don't need to watch someone else losing money. I can do that plenty by myself. So for me, when I train people, it is much more important that I actually make them understand the nature of the game rather than teaching them techniques. So going back to the question that I had earlier, why don't I use indicators? Well, imagine that you are looking at this chart here on this day here. How quickly do you think that stochastics would get oversold? How quickly do you think MACD would hit the bottom of that trading range? How quickly do you think that you would begin to get contrarian signals that actually maybe you should begin to buy the market because the market is now getting cheaper and cheaper and cheaper and cheaper? But that's where I've trained my mind saying, screw that. Don't begin to guess where that low is. Just keep pressing the downside. If the market wants to go down, make it go down even more. Don't begin to be the jerk that thinks that just because you have one green bar in an otherwise sea of red, that the market is going to change its tune because what you saw one green bar. It doesn't work like that. That's not how the market is comprised. If we go, let's take a DAX chart from. Let's go scroll back a day or two where you have a decent trend. You have a relatively decent trend on this day here, which is on the 5th of July. I'm pretty sure that I was on board most of this trend down. So that was like a 150 point day for me. But when you study the individual, let me get rid of this. When you study the individual bars, that's not what I wanted either. When you study the individual bars, the foundation of your technical analysis should just be present. Well, you got a top, you got lower tops, you got lower lows. But notice the pattern here. And here I'm not talking about head and shoulder patterns. I'm talking about the reality of the market. Every single time you have a green bar, the market immediately hammers into those bids and pushes the market down again. So any counter trends in a strong trend usually only last 3 to 5 bars. So here we have it lasts 1, 2, 3 bars, and then we push lower. Here we only get 1 bar. Here we get 1, 2, 3 bars, and then we push lower. So if you're in doubt whether a 5-minute chart is your right time frame for you, pick a 10-minute chart because you get much better signals. But you still have to overcome the fear that you have of being able to sell something that had already fallen. So if we're looking at the at the DAX right now, the right thing for us to do would actually to be thinking, well, I need to sell short here. Now, considering I'm already fairly short, this shouldn't be too hard, but let's try a short position here. I don't mind sacrificing a point, so I'll lose a couple of £1,000, but it's not that I'm not going to make them back later today. So I'll sell the DAX at 43. And let's say, for the sake of the argument, that we'll put our stop loss at, we'll risk another 20 points. Okay. What I would ideally like to be able to show everyone here is what happens when you're actually catching on to a trend and you're beginning to add to a trend. Because it is probably one of the greatest feelings as a trader, is the feeling you get when you're finally catching a winning trader. And I like to illustrate it where I really got this from. And I warmly recommend you study this gentleman here. In his biography by a guy called Fallon, one of the greatest pit traders ever, his name was Charlie D. He said, the time you know you become a good trader is that first day you are able to win by holding and adding to a winning position. There are many people in here, and here you talk about the trading pit, that have traded for a long time and who have never added to a winning position. Unfortunately, it is our human nature to want to cut our winnings. And Everett Klipp, who was also another floor trader who also taught newcomers to the trading floor at Chicago Board of Trade, he said that it is perfectly natural to have bought at 6 and want to get out at 7 because, hey, you don't want to lose the money that you've already made. That's human nature. And it's also human nature to ride the losses. But the problem here is that when you are a good futures trader, everything you do becomes counter-human. And actually, you have to fight your humanness. So unless there's a real reason for doing something that you're seeing in the market, you kind of have to just be prepared that when you are a good futures trader, everything you do hurts. It feels counterproductive. So now the DAX is at 30. So instead of sitting and clapping my little paws thinking, wow, I've done so well, you add to your winning position. You keep selling. You keep pressing it. And of course, you're going to end up in a situation where you're the one that sells the low tick. But if the market is really weak, you sell again because you will catch trends. So that 20 points that I lost before, well, it quickly gets compounded into something great. So right now, right in front of your eyes, I am plus some 30, 35 points. Am I getting through to you here? Of course, some point you have to consider taking your profits. And just so I can maybe get the message home, right now I'm up plus 1,300, plus 1,600, and plus 4,000. So right in front of your eyes, I'm plus about 5,000–6,000 euros, even though I've taken a loss. So I think I'd like to just prove that to you, that this is so much more important. So here we're making 2,600 euros. Here's another 1,700 euros. And here is another 1,600 euros. And I still have a short position. Now, that's what I mean by having a philosophy in trading. Of course, FTSE. You have to be short the FTSE now as well. So, Simon, are there questions? I mean, am I getting through to people here?
Yes, indeed. Thank you. Peter asked, does Tom not use a profit target?
No, I don't. Why would I? Why would I on a trend day begin to think, oh yeah, I'm so bloody smart that I know where the low is going to be? I mean, Peter, think about what it is that you're doing to yourself and ask yourself this very simple question. If you are confronted with a chart like this, let me just find it. I want to ask you something, Peter, because this is really important. What would give you the greater pain? Listen very carefully. What will give you more pain? Having a profitable position and closing it, and then to see the market give you even more points, or having a profitable position, closing it, and then seeing the market actually go against, and you would have lost some of the points. So let me try and explain this with a practical example. Imagine you sold DAX short at 40 and the market goes down to, say, 30. If you closed at 30, what would give you more pain? To see the market go down to 20, or see the market but with the alternative that the market went back up to 40 and thus taking your profits away? To me, there's more pain in seeing the market going my direction and I'm not on board than the pain that I receive from giving away some of the points that I have made. I.e., I would rather sell short at 40 and then add to my winning position at 30, and I now have an average price at 35, and then get stopped out of the whole lot at 40, than to see the market go down to 20 and I'm not on board because I took my profits at 30. Do you see, Simon, that this is a question of philosophy? It's got nothing to do with techniques that you're using. Absolutely zero.
I do, Tom. We're getting some terrific feedback on the message board for your webinar. Excellent stuff, says Caroline.
So this is what I do every single day in here. Now, I get asked quite a lot, why the hell am I doing this for free? First of all, ladies and gentlemen, I have been sitting observing people trade for years as a broker. And these people have been attending courses with, I better not mention names because that would be unfair, but you know those names. You know all those people who drive Ferraris and Lamborghinis and fly helicopters, and they don't teach you shit. They literally teach you garbage, absolute garbage, because if they taught something of value, you wouldn't have a failure rate in the industry of 80%. You just wouldn't. Now, I don't want to be unfair to these people either, because they're doing their best they can to actually teach you something of value. Unfortunately, they are probably 90% marketing, 10% research. There's another reason why, because I'm not Red Cross. I really am not, okay? I'm not a charity. I don't do this because I'm hoping to buy my way into heaven. But when you are trading live, it enforces a sense of discipline, because now you are responsible for a lot of other people who are sat there watching what you're doing. And because what I'm doing, I am quite good at it, people have a tendency to actually follow you. And when I've had a bad day, I know that that some of the people that followed me, they had bad days too. Simon, there was a day last week, and I know many of the people that work for the spread betting and CFD companies around London, because on account of that, I often do seminars for their clients, and I know that many of the people that in my room, they actually trade with these brokers. And a friend of mine called and said, I think your lot had a fantastic day. We lost about £100,000 yesterday because all of your clients were short the market and they kept adding and adding and adding. And we know there's only one trader that does exactly that. And it was the pattern that whenever, it wasn't that they sort of just came in at random times differently. No, everyone sold 35. Everyone sold 25, everyone sold 15. And before we could even get out there and hedge our position, we were short about 3,000 or 4,000 pounds a point in the Dow, and the Dow just tanked. And we were
Wow.
sitting there thinking, what just hit us? What just happened? And to me, I'm so proud of hearing that, because I'm thinking, actually, people are beginning to get it. And so what we need is, we need to educate people that it's not technique that's going to make you a great trader. It's your philosophy. You can't, you look, we started off, and the first 35 minutes was an absolute nightmare. Sure, we had an inclination that this market was headed lower, which eventually it did. But we sat there for 35 minutes and thinking, is this going to happen or not? Because it sure doesn't look like it. And then finally, the balloon burst, and we got onto a good trade. And that's where someone like me really comes to life, because once we begin to trend, I will furiously add to my position very, very aggressively. So there will easily be days where I will be clocking up towards the 1,000 pounds a point positions. But I don't do it recklessly. It's not gambling, because essentially it's a philosophy. I'm prepared to sacrifice the points that I have made in order to gain more at the other end. I'm prepared to sacrifice those 50 points in order to make 200 points or 300 points. Do I have losing days? Of course I have losing days. You should see some of the days where I'm just not in the mood for it, and I should have just gone for a walk instead, or I'm just getting it wrong. But yesterday was a good example of that, because by the time the morning was over, I was minus 20, 30 points. I mean, I could not get a break even if I tried, Simon. I just kept trying, and I kept sort of having getting tiny losses. You're losing 5 points there, 10 points there, because you're just trying to get a winner. And then finally, the market actually begins to trend, and you jump on board.
You might be changing some minds this morning, Tom. Peter says he comes back. I would have a target for the day, Tom, and when and if that was met, I would then go and walk the dog. However, my outlook might well change now, but I guess I'd need a much larger trading bank.
Not necessarily. Look, when I started trading, I was trading a pound a point. This is back in 1998. And ladies and gentlemen, I'll be really honest with you. I was not a good trader. And I probably traded 5, 6, 7 years before I actually began to take it seriously, and I actually began to understand what it was that I was doing. So I don't want you to think I've been doing this for a year, I'm not getting nowhere. I was certainly not. I was not a good trader. No, I just wasn't. I understood technical analysis. I could tell you all about ratios. I knew all the settings of MACD and RSI and stochastics. I understood Bollinger Bands and Keltner channels. But when I was in a position, I would never let it run, because I would always be scared that my points would get taken away from me. But no one tells you that. No one tells you that you shouldn't be concerned about buying the low of the day, or being concerned about shorting the high of the day. You need to get your head straight. And once you get your mind straight, it is relatively easy to make money in the market, because you don't get fazed by losses. And it's the losses that is our downfall. We think, oh my God, I lost 20 points and I should go with the dog now. Oh, I've had 2 losing trades in a row now. I shouldn't trade anymore today. Oh my God, I've had 4 losing trades in a row. I shouldn't trade for the week. Of course you should. if you can still maintain an even emotional attitude, why on earth would you stop trading just because you had 2 losing trades? Sure, if you got a blasting headache, or if you're going through a divorce or a bereavement, there might be some external circumstances that is somehow affecting your performance. Sure, we can all agree on that. But if it's because you have a bad morning, man up and deal with the realities. If you flip a coin 100 times, Simon, you're going to get 50 heads and 50 tails, but the distribution of heads and tails on your journey from 1 to 100 will take you on some weird shortcuts. I once went on a date. This is a long time ago. Went on a date and I tried to entertain my date with statistics of trading. Miraculously, she ended up marrying me. I don't know whether I was just boring her so much or or whatever it was, but I basically bought her by saying, look, I once hit a coin and I got 15 hits in a row. Now, statistically, that should be impossible, but it isn't. So, of course, you are going to have 2 or 3 winning trades in a row. But just because you have 5 winning trades in a row doesn't mean that you will then quit your day job now and say, well, that's it. I'm going to be a professional trader. So when Peter then, I think it was Peter, says,
That's
when
right.
I've made my points for the day, why would you stop, Peter? What if that day was a day like this, where the Dow just kept falling? Why would you want to cut short your earnings ability? But if you're not mentally prepared for sacrificing some of the points that you've already made, well, then, yeah, you will have a problem, because what essentially you're doing is that you are trying to shortcut your brain here. Peter, the real reason why you stop trading is out of fear. You may tell yourself something else, but the real reason why you stop trading for the day when you made your money is because you're afraid of losing it. That is the subconscious reason.
That's good, Tom. Fantastic. One more question, maybe we've just got another few minutes. Rami asked a
We
good
don't have
question.
to stop now. I mean, I'm here anyway, and I'll be here till
Here.
5. So if you guys want to trade with me, I'm happy to stay here all day.
Well, Rami says,
I'm doing quite well right
how do
now.
you know when a trend day has established and when to add to a winner?
You don't. You see, you can have days like this where you think you're on a trend day and then you begin to do counter. But in all my studies of trend days, there are certain traits that are true. So if you have a true trend day, the market will never come back below a prior low. That is one of the hallmarks of a trend day. So if you study Tuesday and Wednesday on this slide here, you will see that it's not until towards the end of the day that the first time the market actually managed to get above a prior high. And it's only towards the end of the day on the Wednesday, I lost my microphone, that the market actually managed to get below a prior low. So as long as the trend is intact, I'll stay short the market. So if we look at the DAX right now on a 5-minute chart, you say, well, I've had absolutely no attempt for this market to go above a prior high. That's how I can stay in with confidence. So here's FTSE. So I should really add to my. I'm just going to close my gold short and my gold long position, because I don't think it's the right thing to be. If the markets are falling, I don't think I want to be in gold. So I'm still short the DAX, but I'm short from a few days ago. I'm still short the FTSE from this morning at 26,712. Now it's at 82. Take a look at the Dow right now. And of course, it always looks easier with the benefit of hindsight. I know that. And it was a confusing morning. It really was a confusing morning. But right now, this market is looking weak, and I would be looking to continue selling short. So I missed my opportunity here. The FTSE was at 30 just before I started the explanation of the Dow. I would have sold at 30. Let's see if I can get an opportunity to do so. Now, guys, if you want to be part of my live trading room, it doesn't cost anything. Just go to tradertom.com and click on this thing here. Follow my Telegram group for free. You have to you obviously need a smartphone, or you need to establish Telegram on your desktop. All you do is you click here, and I'll be holding your hand all day. Well, is it worthwhile I give you my phone number so people can send me an SMS? It might be easier.
I would, if you're happy to do that, yeah.
Yeah, one sec. Let me just find a Word document.
Is it your same mobile number?
So the way Telegram works is that it is linked to a mobile phone. In this case, this is a. And so if you send me an SMS, I'll send you a Telegram link. And when you click on that link, you're basically part of the group. Or you can find me in Telegram on, I think it's Tom Hougaard. And you can send me a private message there.
Well, the number's in the chat box as well.
All right. What else can I say? I don't know what I can say. I'm just so happy that I actually got an opportunity to show you DAX. If this hadn't been an exercise of me trying to prove a point here, I would still have run this DAX position. And you can see I am still running my core position here. So right now I am plus 32,000 euros. Oh, I'm making 9 points in the FTSE. Go figure. I'll probably eat tonight as well.
Martin Galing asks, Morgan, do you martingale at all when you increment the stake after small losses 3 or 4 times originally?
That's a good question. Will I have time to answer that?
I'm under no time pressure. We are past.
Okay, all right. Well, I'm on no pressure. I don't care. I can stay here all morning.
Is everybody happy to stay on for another 10-15 minutes?
Well, they can leave if they don't want to be here.
You are free to leave, of course, yes, when you want. But if
you have to be here.
We have recorded this, so you will be able to post it in our RTC website if you want to catch up. If you need to go now, you can catch up the last. Well, Tom, if you're okay, we'll stay on for another 10 or 15 minutes. The response is overwhelmingly, absolutely, yes, please. So. And I'm happy to do so.
Do you guys want to know what normal behavior is in the markets when we get in there? The normal behavior is that we spend all our time learning candle patterns and indicators, and we back test it till the cows come home. But actually, how many of us spent real quality time on looking inwards? How many of us truly get to know what our strengths and weaknesses are, and then work on those strengths and weaknesses? I want to tell you a story because I think it's a good story for you to bear in mind. In 2007, I was invited to Wimbledon, the Wimbledon final, and it was courtesy Ralph Lauren. Yeah, please don't ask me how the worst dresser in the world got invited to Ralph Lauren VIP tickets. I assure you it wasn't me, it was through a friend of mine. So there I was, and I sat next to all these celebrities. It was pretty cool. And I got to sit next to a guy called Luke Donald. Do you know Luke Donald, Simon?
Doesn't ring a bell, actually.
Well, no. If any of you are golfers, which I'm not, Luke Donald at the time was number 9 on the world ranking list. So he's a hotshot golfer. He's got a very good looking wife. Whew, she was gorgeous. Anyway, back to the story here. I got to sit next to Luke Donald, God bless him, because the first thing I asked him was, hey Luke, why is Tiger Woods better than you? Now, I didn't mean it as an obnoxious question. Generally, I didn't. I wanted I wanted to ask him what made Tiger Woods better than him. And the answer I got was kind of the answer that I was hoping for. He said, I don't think Tiger Woods is necessarily a better golfer than me. I think the quality of our swings is just as good. I actually think that on a good day, I'm a better golfer, mechanically speaking, than Tiger Woods is. However, where Tiger Woods is just miles ahead of everyone else is in one particular feature. Say that I did a right old doo-doo on the 17th hole. I think it's called bogey when you mess up, right? So you try to go for par or below par, but if you use more strokes than is recommended, then you get a bogey. Imagine that Tiger Woods and I had were trading together in the competition, so not trading, golfing together, and we had both done a bogey on the 17th hole, and now we were putting for the championship at the 18th hole. I would probably still be thinking about how I messed up on the 17th hole, but Tiger seems as if he's got the memory of a goldfish. It's as if he just doesn't have any memory of his bad strokes. So imagine that you brought that into trading, and no matter how much you messed up, you had no recollection of it. But the fact is that we will have that jolt of pain, a pain body sent to us whenever we are about to execute a trade. And we remember that time when we let a profit turn into a losing trade, and we don't want to experience that pain again. This is what I mean, that our mind is put together to avoid pain. I'm letting my loss run. Well, I'm telling myself it's because I'm hoping, but actually what you're really doing is you're trying to avoid pain. Or I'm taking my profit without reason. You're telling yourself, I'm afraid my profit will disappear. The reality is you're just trying to avoid pain. Or I'm winning, and so I'm reducing my stake because I don't want to, because I'm afraid of losing what I made for the day. Well, actually you're honest, but again, you're just avoiding pain, and so forth. So not so normal human behavior is the inward looking person who addresses the weaknesses rather than just trying to focus all their effort on technical analysis and testing systems. You're much better off actually stress testing yourself. And I have this saying to my students: for every hour that you spend on technical analysis, you should spend an hour on working on yourself. Do you guys know how I warm up for the trading day? Before you and we met each other here today, what I go through to prepare for the trading day? It might be interesting for you. I call it my warm-up ritual. And basically what I do is I have a PowerPoint presentation. There's quite a lot of slides on this PowerPoint presentation, as you can see. So I think it's about 600-700 pages. In here, I have listed all my big trades. And so what I do is I select some and I begin to go through them. So it looks something like this, right? The market opens, gap down, and I sell short, sell short, sell short. Okay, what happened next? Was it a good trade? Oh yeah, it was a good trade. Thank God for that. Oh, so I'm beginning to warm my mind up saying, hey, mind, this is what I want to achieve today. I want to follow the trend. And when I'm right, I want to sell more. I want to keep pressing the trend. Oh, you exited there. Okay, well that's okay. You didn't exit the trade right at the low. No, of course you didn't, because you don't know where the low is. So don't even entertain the idea of trying to figure out where the low is. Did you lose a lot of money? Did you leave a lot of money on the table? Sure, but then there's the days where you actually close the position more or less at the low. All right, let's take another trade. Okay, here I'm selling short oil. Well, that seems like a good trade. Keep adding, keep adding, keep adding. And I will go through them, and I'm not selecting the winning trades. I'm selecting all of the trades. Here's a ginormous losing trade where I'm losing 155,000. Okay, what did I do wrong there? Well, maybe you weren't quick enough to realize that the trend had actually trained, and instead of being long, you should have been short. right? I am now beginning to get my mind geared up for anything that the market can throw at me today. Right. Well, your job is to keep pressing the trend. So keep selling short, keep selling short. Right, I shall do that. I am now plus 2,000 pounds or 1,800 pounds in the FTSE. And I've been talking half of the time here rather than just pressing the trend, pressing the trend. This is mindset. This is not technical analysis. All this is doing is telling me what's going on. I need to have the right kind of mental disposition in order to be able to handle this. Would it bother me to sell short the FTSE right now? Nope, it wouldn't. Happy to do so right now. I'll sell 100 pounds a point right now at 21. Why? Well, who am I to say that the low has just been reached? So to answer the question about a martingale, if I have a losing trade, I will more likely scale down my trading size until I'm getting a winning trade, and then I'll scale it up again. What could make me leave the day? Two things. One, that I just don't feel up for it. Maybe I have a headache. Maybe I just don't feel well. Or I feel that the market is really boring and I don't think that anything is happening that I want to be part of. But reason number two is rare, because I know that the market can change its tune really, really quick. So we might have had a very confusing morning to begin with, but after that, pretty clear sailing. You got nothing but sellers. And notice this, you haven't even on one single 5-minute bar been able to get above the high of the prior bar. They're going to be pretty angry in that Telegram group today that I'm not there to guide them through.
Yeah, you can't be in two places at once. Well, we're certainly grateful that you spent the time with us this morning, Tom. I'm sure there'll be a few of us here going through to your group once we get finished today. And again, a couple of questions coming in about the platform you're using. This is Trade Direct 365. This is an Australian broker.
Oh, look, let me just let me give Trade Direct a little pitch because they deserve it.
Yeah.
To me, it's the best broker in the world for several reasons. One, their spreads in absolutely everything are fixed. So when you look at some of the brokers, they say they have spreads from, and that is the key word, from. It means that they are variable spreads. So you may be able to trade euro dollar at 0.4 from 0.4 somewhere. But when the Dow opens, they have a 1-point spread in the Dow, which CMC is 1.6, IG is 1.6, Pepperstone, la-di-da-di-da, all 1.6. This one, and it's fixed. That's amazing. They also give a volume bonus away in the first month. And not only that, they offer you 200 to 1. Now, that's not a problem for me because I'm a professional status anyway. But the fact that they offer fixed spreads on absolutely everything, and you saw how quickly it was for me to execute my trades, to me, that is just key. So if you're one of those people that are suffering a bit under the ESMA rules where you can only get 20 to 1, here's Trade Direct. It's regulated by ASIC. It means that they have a banking guarantee. They have an ombudsman. You feel protected. You actually feel as if you're not trading with some broker that is based out on the Marshall Islands or the Seychelles. Actually, you feel like, well, look, this is a proper outfit. They bank with Westpac, and I looked up Westpac, and it's the 46th largest bank in the world and the 101st largest company in the world. So you just feel like you're not sending your money somewhere strange.
Ken's unable to join G365 because he's in New Zealand. That's a shame.
Yes, I heard that, but then I think that's something to do with the whole Australia, New Zealand. Yeah, sorry about that. Well, look, I'm from Denmark. I can't really help you with that, my friend.
Is it a spread betting company or is it a broker? Kapil's asking.
Yeah, so that's where it gets quite interesting because they're a CFD company, but they actually offer you spread betting terminology. So let's say that you're based in Germany. You can trade everything in euros. Let's say you're based in England. You can trade everything in pounds. I wonder if uh, I don't know if I could TD. Hang on, TD 365. They're getting a little bit of they also have a demo account that will be, so when you go to the demo account, it will say demo right there. But they got ASIC regulation, and they're the only broker in the world to offer traditional CFDs and the new revolutionary single currency CFDs. So there you go.
On your Telegram group, Tom,
Yeah,
Ken's asking, what time do you have a fixed start time? Obviously, you're spending some time with us this morning, but on a normal day,
I start at 5 a.m. and I finish at 9 p.m. I'll tell people if I'm not there, if I'm going out. There will be days where I can't trade because I have I have a family that wants to see me every now and then. I have a young girl that wants to see her daddy every now and then. And if I go on holiday on business trips, I always start the week by saying, this is what you can expect this week.
There we go. Well, Ken, that'll be good timing for you, I guess, for 5 a.m. start. And the early birds here in the UK as well.
I wonder if I can show you what it looks like. Just gonna remove some of the. So
5 no, just
this
to
is
be
what it
clear,
looks like.
yeah, 5 a.m. Ken is the UK time we're talking. Tom, you're in the UK, even though you're from Denmark, but
Sometimes I'm in other places. Okay, so look, I will make trades. So let's just have a look at a couple of trades of the yesterday. Say, okay, look. I'm putting here we're short the DAX. It's a good stop loss, but now after an hour after the open, there's still no follow through. So here I lost 12 points at half position, so I lost 6 full points. So now I'm minus 10 on the day. Trade alert. I have shorted the DAX at 12,562 with a stop loss at 12,578. And then that's at 9:44. At 9:45:46, I'm writing trade alert, moving stop loss to 12,659. Sorry, I should have said 569. And then I explain, why am I doing what I'm doing? Why am I short the market? So I try to actually teach people, but I think the value of this Telegram doesn't necessarily lie in my abilities as a technical analyst, because I don't think my abilities as a technical analyst is any better than any other. I think my ability lies in the way that I trade. And that the way that I trade is based on having observed tens of thousands of clients execute tens of millions of trades. I probably observed about 100 million trades in my career, because we got to work at 7 o'clock in the morning, 6 o'clock in the morning over at Financial Spreads and City Index. And I stayed there for 10 years. And I would rarely go home until 9 o'clock at night, because either in the evening I would be sitting at the night desk, or I would be doing some sort of technical analysis seminar. A lot of you people probably know me from my days when I did technical analysis seminars at City Index. I imagine I still meet people who go, oh, I remember you doing them. Yeah, we did them pretty religiously. So for example, this is a good example here. So I'm shorting again at 41 and stop loss is now at 52, and I'm closing it at 32. So the market had moved just 20 points, but I make 38 full points out of it. That's what you're seeing here. And the reason for this little joke here with Peter Griffin is that actually I closed it at 32, but the market pretty soon after went 25. So I was a bit annoyed with me that I didn't get more out of it. And then people send me messages like this. So Daniel, he wrote, I'm so happy. I just made 820 euros trading £5 or 5 euros a point, but I kept adding and adding and adding as you suggested. So You know, I'm really happy when I get these started. I just want people to trade well.
Tom, Kapil's he's searching for you on Telegram at the moment. It says there are 5 IDs for Trader Tom.
Okay. Is there? Okay. Well, look. How do I don't know how to find myself. Let me just get off screen here in case I want people's privacy to be respected. I suppose I could ask the group what is my.
I'm afraid I don't have it downloaded on my phone at the moment, so I can't.
Okay, I'm just gonna ask. Does anyone know what my Telegram name is to contact me personally? Is it at Tom H? Search. I'll try myself.
All right,
Tom
we've already. Shamit's already. Gita said at Tom Hougaard.
Yeah, does it? Oh, there is.
So maybe it's at Tom Hougaard.
Is it? Is that what we decided it is?
Ken's having some difficulty connecting as well. Glenn's also saying at Tom Hougaard.
Yeah, people are saying it's at Tom Hougaard.
At Tom Hougaard.
Otherwise, just follow the link here, and you're gonna set an automated email, and that should really solve it. Everyone says it's Tom Hougaard. Maybe it's Cap.
Yeah, Peter, the RTC Club. Just you're asking a question about the RTC Club. I'm now running all the recordings through rtctclub.com. The previous Elite Club ran into 1-2 issues. Save you a long, boring story, but a short story is that I'm no longer working with the House of Trading. I made a mistake working with them, so we're no longer working with them at all. That RTC Elite Club, I've been assured, has been shut down. So for all the recordings, please use rtctclub.com. I'll write that in here. Okay, yeah. People are starting to have success with the Telegram group now, I think.
Yeah. Okay. Well,
Great.
then I'll probably.
Fantastic. Well,
I hope you
Tom,
enjoyed it. I hope
given us
that
yeah.
I was able to convey in a not too confusing manner, and maybe you'll afford me a couple of closing minutes.
Yeah, please do. Please do.
I don't think that my way of trading is the only way of trading. Naturally not. And I think that you, with success, can take your own style of trading or your own analysis framework and build in the mental principles that I am deploring or utilizing, I think is the right word. I don't necessarily recommend that one sits on what's butt for 12 hours a day, because that's not a particular healthy lifestyle either. I spend a lot of time being focused on what I eat and what I exercise. I do look after myself because, you know, I'll be 50 years old this year. And when the body gets to this age, it doesn't do you any favors anymore. You got to do it favors. But having said that, I think if you would let me, I think you would be inspired by not necessarily my analysis framework, but how I think when I am in a trade. And I'd like to finish off by asking you a question. Many of you will be having a few years on your back, and you will be parents yourself. If you were selecting a school for your children, would you select a school that had an 80% failure rate? You see, of all the thousands and thousands of people that are opening CFD accounts every year, do you think all of those thousands of people are stupid? I assure you they are not. Trading attracts a certain kind of personality, the personality that like to handle their own affairs and take charge of their own financial destiny. So it would be ludicrous to suggest that the people that open trading accounts are stupid people. Yet 80% of them still manage to end up losing as traders. And so from my point of view, that has nothing to do with them not understanding the use of Fibonacci or stochastics or bar charts and candle charts and formations. And it has everything to do with the way they think when they are in a trade. So you should really spend a significantly much more time on improving the way how you are thinking when you are in a trade, rather than figuring out whether you should using one form of analysis and another form of analysis. And I think the strength of the Telegram group doesn't necessarily lie in me telling you something from a technical analysis point of view that you don't already know. What I will be offering is this free from fear ability of trading, being able to trade the market without any emotional shackles. Yeah, sure, you will see me being human as well. I assure you, I am far from fault free. I think then there lies the strength of it. All right.
Tom, thank you very much. Indeed, here we are, 9:30, and I think on behalf of everybody here, thank you for spending this time with us this morning, letting us look over your shoulder, giving us an insight into what the people on your Telegram group enjoy with you on a daily basis. It's been very eye-opening, and the feedback has already been tremendous, and I'm sure.
Yeah, sorry about the losing trade, but hey, you know what? There'll be plenty of them in Telegram as well.
Well, you're real, you're human. Tom is a
Indeed.
living legend. Oh, there we are. How does this?
Bollocks to that.
Thank you,
Don't
Tom.
do that to me.
Thank you so much for the insight. Great inspiration. Peter, I'll contact you separately about that membership. Many thanks, Morgan. Says Morgan. Nancy is subscribed to the YouTube channel. Great inspiration, says Neil. Fantastic, and it keeps on going. So there we are, Tom. What a great morning we've had. Thank you very much.
Yeah, it's all right.
And thank you all for starting your day with us as well. So we will be back with you tomorrow morning. We have Jay Lakhani from Bindal FX joining us for another sort of over your shoulder hour in the morning. So hopefully you can join us for that. In the meantime, we will draw proceedings to a close for today. Have a great Tuesday. Bye bye for now.